All right, what's going on, guys? We want to do a quick video for you guys today here on Fibs, just a real quick overview on how me and Diamond would go through kind of from start to finish, pulling up a chart, seeing what we see, and then how we would go about plotting these fibs for some levels to trade in a current retracement. So without, needless to say, we'll start this off that you really have to be retracing a recent move to have these applicable, right? Like if you're setting new higher highs or lower lows, they're not going to be as great. Given the name, it is a Fibonacci retracement. So you're going to want to have a previous strong move and then kind of find a floor in either direction or a ceiling if it was an uptrend, and then start retracing that move. These are then going to give you levels for reversal and kind of consolidation. When you're chopping sideways, it'll give you, levels for bounces and reversals when you're trading in that that kind of consolidation that we've seen recently. So these should be pretty beneficial to you. Even obviously, if we're in a sell-off, right, you were setting lower lows, you're going to play puts regardless. But when the floor is kind of found and you start getting bounces to the upside, shorts start covering and you're retracing off that sell-off, which has been recently happening, and then you kind of trade sideways for a little bit until new news comes. These will be really beneficial for you guys to then have levels to trade between off those lower lows, and you're kind of bouncing up. So here's a quick one. We just pulled up NDX, right? So the NASDAQ 100 actual indice. We're going to chart these. I'll show you exactly from start to finish. I got a blank chart here. We'll show you how we would go about this, right? So we're starting off here on the daily. Not really much to look at here, right? If you were just looking at a blank chart. If I were to chart this right now, so we've been in a recent bearish move. We've been selling off. So what I would want to do is find my recent high and low of like a recent trend, right? So at quick glance, obviously you had this initial sell-off, right? From the start of the year, I think this was the 28th, yeah, up until late January, where we kind of found bottom and then got a quick squeeze back up. This would have then been your retracement until the recent Russia-Ukraine situation. We set lower lows going into that Thursday open. So what I would do here then from the daily, I would pull up the 184 hour here to get a closer look. And to my visual, right, if I was going to play a recent trend, my recent trend here would be at this high, because we had this bounce, we kind of consolidated. This was pretty much your local high before the actual recent sell-off began. So to me, this is what I would want to plot my fibs at on this, would be this high, if it wants to work. Come on. There we go. Down to this low. This would be my recent move that I would want to plot, right? So I would do like a quick rough estimate, then I would go in and get the actual highs and lows. So it looks like the high here was 1556.24. And then my low 1365.44. So right off the jump here, and you can see you kind of want to back test these as you put them in, right? You can see that this 618 did act as resistance. We ended up opening above it Thursday open and immediately rejected off and dropped down to the 382 here. So this is kind of how I would at first glance want to look at this. And then I'll come in here to say like the 30-minute, and I'll kind of test how these were playing out, right? So you can see this high here was 14,296.6, and we had 14,295.75. So literally within 1 point was that rejection. And then it coupling with your EMAs, right? You can see we sold off. We found support here at the 50, got another bounce, kind of consolidated between levels. And then you can see right here, we rejected. We opened a little above it, but rejected back under. Got our first bounce here Thursday off of this 50 level. Ultimately then double tested it, rejected, broke through, and fell down to this 382. So it is worth mentioning, right? We plotted this on the 4-hour chart. So these are going to be accurate more so on a 4-hour interval, right? So like if I pull this back up, looks like it plays great here, right? When you're playing this, then trading intraday live on the 5-minute, they're not going to react to the exact price point most times, as you can see, right? But then I'll go back here, right? So this, we found support here, not at a fib level. So I would back test and I would say, okay, where did we get this bounce off of, right? if I hover my mouse right here, you can see this pretty much came off of this this bounce here previously. So this was going into last week, Tuesday, Wednesday. Looks like this was a little demand zone. Then becomes applicable again recently, right? So I will go put in my little demand zone box here, and you can see perfectly, right? That's where we get our bounce, and then pretty much holds twice on Friday here. So that's quickly, you know, how I would be going about doing these. I like to go out to say like the 4 hour. I'll chart our recent move. And so, you know, this is all going to be contingent upon you retracing a recent move, right? So before we had this bounce, right, I wouldn't have been plotting these. I would want to see confirmation that this was our recent low before going ahead and plotting this. And previously, right, we had this late 2021 into, you know, late January 2022, this really strong sell off. These would have been the levels I was playing until we broke this low, which you can see we did last week. Then it becomes time, you know, once you break out of this range, you know, now it becomes time to draw new ones of your recent range, which in my opinion would be right here. So on a 4 hour chart, you can see these play pretty well. This is what I would be looking at intraday. And again, plays very well, right? If you were playing this on Thursday, once you had your break, hook, and go pretty much off this level, you can see we sold under it. Got a couple of green candles to bring us back near it, and then really knifed off of it. Once I got this, I had my EMA crossover. I would have been playing to my next fib. So I probably would have taken, I don't know, say like the 14,000 puts or something. You could have taken, you know, 14 100s, anything like that, right? You'd be playing to this next fib, which as you can see, we fell pretty straight to this fib level before getting our bounce. Got a really strong bounce off of it on the second test, kind of held here into Thursday's close. And then ultimately on the third test here, this level broke. And you can see we played all the way then to the next one, actually broke through the next level, didn't get a bounce until off this demand zone.
Yeah, so like Mander said, the primary thing when you're doing your fibs is you just want to make sure that you're using, you know, the most recent trend. And the whole point of using the fibs is trying to find out, okay, now that we've had this move, right, from the local highs to the local lows, on our way back up, where could we potentially see some resistance for a reversal, right? Like that's the whole point of using the fib. Particularly in the situation that we're in now with the market having you know, topped out and it's coming down. That's how you want to use the fibs. Is okay, we already made our move to the downside, the trend is down. I'm looking for a retracement of levels within that trend, so I'm going to find the local high and local lows, and I'm playing those levels to the upside as resistance and then support on the downside, right? You can see like right there on I guess that was Friday, that 38.2 level does act as some support. And then even in this example, you can see that we break that level and we find support at a different level in between our fibs, right? So again, the fibs are not going to, you know, be all seeing and going to be able to tell you, you know, where every reversal is going to occur. And so that's why we'll use these demand zones within our fibs to say, okay, we got to bounce at this level. It's not necessarily a fib level, but it does seem to be important, right? We got to bounce there twice on the left side of the chart here, and then again twice on the right side of the chart on Friday. And so you have to say to yourself, if we're getting support at this level and it's not a fib level, maybe I want to, you know, mark that out, you know, in addition to my fibs as a potential key level. And so I do that all the time as well. So I couldn't agree more. I think that this was a really solid example. And, you know, one of the primary ways that we like to use fibs, like I would say when you see that 618 rejection, can you go to that, like whatever day that was where we opened up above it and gapped down?
Here.
Yeah. So like you see how we had already kind of rejected that 618 two times, right? We rejected it on Monday and we rejected it on Tuesday. Now on Thursday, we opened up above it, can't hold, get that retest, the minor retest, again, can't hold. At that point is when I say, okay, my fib has been rejected 3 times. It's got to be significant level. And when I'm looking to take puts, I can feel confident that we should at least see the next fib down, which from the 618 is the 50%. And you guys can see that's exactly where we got our bottom, you know, at least for a couple of hours there before ultimately breaking the 50 as well and heading all the way down to the 3.8. So that's how I would say, is the best way to do it. And I would also say that if you want to go back out to the macro time frame of the daily, one thing that we're always preaching is you're not always going to, there's no right and wrong way to necessarily draw the fibs, because they're more subjective, right? If I have the 50 moving average and Mander has the 50 moving average, they're going to be the same number. They're going to be the same moving average. But we'll both look at a chart. We may have different opinions about where this trend began, and where it ends, right? So where the high of my fibs are and where the low of my fibs are. There's no proper or like correct way to do it. This is just how we do it in terms of looking for that nearest trend and looking for, okay, if we were to reverse that most recent trend, what would happen, right? You could easily take these fibs and go all the way back to the high that the NASDAQ set in late like November, if you really wanted to, or even December, the December highs there, right? You could do that fib, and that one would also not necessarily be incorrect. So just go in and kind of, the way that I do it personally is I like to pick different highs, see which one works best, see which one is following the levels best, and that's the one that I'll ultimately go with, until we set new highs or new lows, and I've got to make new fibs, right? So that's how you should approach that.
Yeah, perfect. And you can see, so for me personally, like a lot of people probably would have jumped in here and charted this, right? This was your, before this really strong sell-off, this was your high. They would have taken this really macro move. And not to say that's wrong in any regards. I mean, you can see these did act as key levels here. If you're looking at this on the daily, right? But for me, these are very large gaps to trade between. So I would want something a little smaller just in personal preference. And so for me, I would be taking the more recent move. This to me was the recent really strong trend, right? This was a pretty much straight down sell off from this this gap up. I'm not sure which earnings this was. This might have been after Amazon earnings. So that's what we got, this little spike, and then this really started the aggressive sell off that we saw recently. So for me, I wouldn't really want these. These are just too spaced out for me as an intraday trader. Now, if you were swinging, different story. You could see these levels pretty much played very well if you wanted to take something on a Monday for that Friday and kind of play it that way. For me, I would want to see something a little tighter. So I really like these levels, and as you can see, right when you plot them, you can see these levels play very well. So that's how I would be looking at it. And I find these really beneficial, mostly for traders. If I pull this out to like the 30-minute, for most traders, you can see we traded just between this range, pretty much sideways for almost a whole week here. This is really tough to trade in because timing becomes everything. And if you were looking at a blank chart, like this is tough. You can't really get any feel for direction. Some of these bounces might seem random. Now, if you come back here, you see, right? And these aren't perfectly accurate because I just rough drew these back, but you can see then again, now we're getting bounces off of some key levels. This one per se, so this one would be one I would want to chart in because I didn't quite have it. So what I would do then after we got this bounce, I would probably throw in a little price level here. And you can see then once we broke through it, this then acted as resistance above on this Friday, not at a fib level. So again, these aren't the end all be all, but you use these in couples with, you throw in some random price levels you didn't have on fibs, you throw in these demand zones. These are pretty much what we would be looking at intraday. So then, doing this after hours, right? I'd be preparing for the next day. This is what I would be looking at. Come intraday here, you could see this was the third ultimate tap, right? We didn't quite get there. This one was spot on. We didn't quite get there on Tuesday. This is now our third rejection of this level. Once this sold off, honestly, right here off this little hook and go back, once this one started knifing, this would have been a really great spot to enter puts. And you can see they would have paid really handsomely if you even took the Fridays, right? You definitely could have gotten these out 100%, had risk-free swings. And I can pull this up. So I probably would have been taking like the 1400s. We can pull up really quickly and see how those did. Not the 1400, the 14,000s. Okay, didn't like it. Why didn't I like it? Is there no W on NDX?
I'll see if I can get one up. What are you trying to find?
14,000 puts.
From Friday.
Yeah. Why is it not? Oh, okay. They are different.
You could do
.ndx 220304. Oh, do they not have weeklies?
It should.
They're not popping up for me.
It's NDXP for puts, and I guess it would be NDXC for calls.
And then the date, and then just the strike.
It actually is NDXP regardless of calls or puts, which doesn't make any sense. But yeah, then date, then CRP for call or put, then strike. So it'd be NDXP 220304, put 14,000.
Okay, well, there you go. So you can see absolutely no volume on these, but they did go like 5 bags.
Zero volume.
Yeah, that's impressive. But regardless, you know, obviously this one isn't a liquid name, but that's the mindset I would be using regardless of ticker here.
Yeah, we just showed you guys NDX, which obviously is the index of the NASDAQ. You could do the exact same thing on QQQ. You know, if we use SPX, you could do the exact same thing on SPY. We've found that the price action on the indices can be a little bit better, particularly for Fibs, but they should work on the ETFs as well, right? So, I mean, it's all personal preference from that standpoint. Let's go ahead and take a look at IWM, and I'll show you guys from my standpoint what I would be looking at there. For IWM, this is essentially how I would have my fibs drawn. Again, I'm looking for a retracement of a trend. And so we do have a trend here that forms, right? And so before this low was put in on January 14th, this would have been a way. I'll go ahead and remove this and just show you guys. If you were trying to retrace this trend right here, right, you would do the exact same thing. Go in your tools, fibs. I would go from the high here, 244. 46. Yes, we do use the wicks. We get a lot of questions on whether we use the wicks or the body of the candle. For the retracements, I'm going to use the wicks. And so I would draw my level, something like that. You can see that we get this perfect bounce off the 50 here, the 50 fib retracement before we do wind up breaking this low. Once we break the low of the fib, that's when I know it's time to draw a new one. So I'd go ahead and I would delete that one. I would take a 10,000 foot view and say, okay, we've got this massive move here. We've got this smaller downtrend here, and then we kind of double bottom. This double bottom was put in, I believe, last week. And so for my fibs for IWM, I would take the most recent high of this trend, the low of this trend. I know that we actually set a new low here on the 24th by like $1 or so. I'm going to keep it with this one. For now, just to show you guys, like, had you not redrawn it, you know, on this day, what it would have looked like. So we've got our high here is 227.13. Our low here is 188.09. Go in, make them as accurate as possible. We changed these colors for the 382 and the 618 just because those are the most important. Those are the ones that I'm looking at primarily for a reversal, right? In this 618, 50%, 382% area. And so again, on IWM, you can see that after we put in our retracement, after we put in this low on January 28th, we got this perfect rejection here off of the 50% fib. Couldn't break through, set a new low again. You know, we're finding that it's tough to break through the 50. We're getting some support down here from the 236. And again, right, so this is a perfect example of where we were talking about that fibs are not going to be the end all be all. I know that I don't pay attention to the 236 retracement a ton, but you can see that we got a bounce off of it here on the 4th, and we got another bounce here on the 1st of March, and another bounce here on Friday. This level, since we keep getting a bounce here, I'm going to look at this level as a significant level. Usually I'm paying attention again to the 382, the 50, the 681. But if we continue to get bounces at a level, it's going to stand out to me and it's going to be significant. And so I'll watch that level going forward, obviously, after we've got 3 bounces there. And again, we have this level here in the middle that it looks like was not caught by a fib. You can see that I'll draw it in here. We get a nice bounce and rejection in this zone, right? It's acting as closing candle support and resistance all through this zone. We get another bounce here on the 14th. And so it's been a significant level. And if I go into a smaller time frame, I guarantee you that you'll see a lot of price action around that level, right? So we get some price action here, some price action here, some more here, right? And so that's how I'm breaking down this chart from my macro view of, okay, here's the pullback that I'm going to chart, right? Here's my macro view. And then I go deeper and I say, okay, where are some levels that we're getting bounces that are not, identified by fib levels? Let me mark those. And now I can go into the trading day with a holistic view of, okay, we've got some fib levels, we've got some demand zones, we've got some additional support and resistance. I've got my levels for the day, and I can feel confident trading in between them using, other levels of confirmation, whether it be news, whether it be my EMAs, whether it be options flow, right? That's how you can use these, add these to your tool bag. And it's not solely, okay, we're at the 382 fib, I'm taking puts. It's not solely, okay, we didn't break this 50, we're going to set a new low. I'm using those things in conjunction with other indicators to help me identify where the trend is, where the trend may reverse, and where good entry spots are going to be for calls or puts, whichever direction you're playing. Anything I missed there?
No, I just think there's another really good one if you want to just hit on the demand zone thing too. If you pull up like the 30-minute. You see right from last Friday's open, it was on the way back up. We rallied Thursday into the close, and then, yeah, if you look at that little demand zone, if you wick it out from where the 9:30 to the 10 o'clock candle went, and then the 10 o'clock candle sold off and then bounced. Yeah, go ahead. Yep. If you go ahead and do a little demand zone with that and take it all the way out, you'll see that's right where we got our bounce Tuesday then into the close. And then again, that acted as support on Friday. Perfect. Yep.
Yeah. And so exactly, like that's what I mean by, we're using these fibs obviously, but you also want to use different levels of conviction. Like Mander said, we got this massive rally. The rally winds up, we gapped up in the morning, winds up selling off a little bit, rejecting 200. Where did the momentum come? So 200 is a psychological level, right? When we're doing these supply and demand zones, here's how I like to look at it. We have this massive rally. The stock opens, it starts to sell off. For the stock to get back above 200, somebody's got to step in, take that bid and say, okay, I'm going to send it over 200. I'm going to start buying, push the stock up back over 200. Where does that begin? Where does after the rally, where does buyers begin to step in to eventually give it that momentum to send it back over 200? That's right here. After we open, this is the open of Friday. We open, start to sell off. We wick all the way down to 196.83. We have our fib level here at 197.3. So that's within $1 range. You could just leave the fib there and be completely fine and say they ultimately were able to close above that fib level and, buyers did their job. But if you want to take a deeper analysis, you can say, okay, momentum to get over 200, which you can see happens here. And so again, if you had drawn that out, you'll see that's exactly where we found support on Friday, ultimately holding us up into the close. And so let's just say the way that you would play that is, let's say that we get terrible news over the weekend, we gap down, we open up at 195. IWM starts to rally and gets into this demand zone. This is where I would look to take puts. I have demand zone turn into supply. I've got my 236 fib, which again, I don't love to watch on the fibs, but like I told you guys, the 236 has been pretty significant for IWM. in particular. And so that's a significant fib for me. I would look at that whole zone and say, if we start to fatigue around here, that could be a good entry for a green to red move on puts and a sell off into the close and potentially the rest of the week, right? And so that is how I'd approach that. It's a great point. But I think that's it for IWM. We could do Apple as well. So this will be a good lesson in overlapping fibs and also how to draw them in the opposite direction. And so looking at Apple, you guys can see that the last two times that we drew our fibs, we drew them trying to capture the pullback. So we would draw them from like the high to the low, for example. You can also draw fibs in the opposite direction from the lows to the highs and then retrace it on the way down, right? And so that would tell you, where am I going to find support? Actually make a move up, you start to sell off. Where can I potentially see some support come in for that move? And so just looking at this blank chart, the way that I would do it, this is kind of the start of the trend for me, or the continuation. Apple's already in an uptrend. This is where the stock bottoms out and eventually finds that momentum to get up there to 180 all-time highs. I would take the low of this pullback here, which would be 138.27. Highs up here at 182.94. Good. So that's how I would have my fibs up, and I could say, okay, on the way down, where can I expect to see support? Perfect 618 bounce here, less perfect here, but still intact. Open below, was able to close above. And then, okay, you look at this chart and you say, okay, this is good. These fibs actually go from October to the high that was set in early January. But look at these levels, right? They're about $10 apart, $8 apart, $5 apart, $5 apart, $8 apart. Apple's not moving $5-8 from the day, usually, right? It's usually a little bit less volatile than that. So you're not going to have these levels to play every single day, right? And so what Mander and I like to do is we'll take that move and say, okay, we've got our fibs there. Let's draw some overlapping fibs that'll have some tighter levels, maybe of a more recent trend that'll help us identify different levels that are a little bit closer to what we're dealing with today. And so looking at this chart, you could do this two ways. You could either go from the highs here at 182.94 to this low, which is what I believe we had in before this low was set. So now with this new low, I honestly might take it from here. I think I'm going to take it from 176.65 to the lows here of 152, 176.65 to 152. And I'll change the color of these fibs just so I know what I'm looking at, right? And so now I've got a little bit tighter levels that I can play between on Apple every single day, even after, you know, I've drawn my macro fibs from back in October to early January. Now I've got some tighter fibs that I can play from the intra month move in February. This is the high of February, low of February here. Now I've got these levels that I can play with. You can actually see this retracement here. I'll go ahead and go in the 30-minute. You can see this retracement here after we put in this low. We actually topped out pretty much right here at the 618, opened above it. Same thing that happened in QQQ. We opened above it, gap down, can't hold it, and that's eventually what leads to the sell-off. And so I would actually expect to see this week, looking at the chart, I'm going to go ahead and put in this demand zone as well. Looking at the chart this week, I would expect to see, so we have our demand zone here, right? You can see that we bottomed out, bottomed out, bottomed out, bottomed out all multiple times without really being at a fib level. So I would just draw that in so that I've got it on my chart. I know that it's not a fib level, but it is significant in terms of the price action. That's all we're trying to do here is identify price action, right? It's really nothing crazy. And so if there's price action at a place that you don't have marked off, you should mark it. And even here, right? We've got this high here eventually leads to this rejection, right? And so that's what I'm doing after I draw my fibs and going in and I'm looking at, okay, where's some action that I missed maybe with my fibs, and I'll draw those in. So this week, I would expect to see this 162 zone act as support and potentially play a reversal there for the upside. If we break that demand zone, I'm expecting to see this 382 fib around the same area as this 50% macro fib. And so when you have the levels, the fib levels pretty close together like this, it makes it a pretty significant zone for me. And even here, right, you can see that the last time that we got down to this zone, bought up, made a rally all the way up to like 170 off of 160. And so this level is going to be important to me if we do get down here in between this 160, 161 level on my fibs. And so that's how I would have the Apple done going into the week. And again, if we can't get above this 164, I would expect us to get back to this magnet down here in the 162 range.
Lovely. If you go in too, I'm demoing this myself to try and find a recent retracement. If you go in from, it looks like last Thursday's, no, 2 Thursdays ago. I'm on the 1 hour right now. So pretty much, it wasn't right where you have your 100%, but that next high.
This one here?
Yeah, so I charted it in there, and it looks like these levels are also playing really well. I wanted to find something that gave a level at the floor we've been finding. So this thing gives you that 50 right where we've been finding the floor.
Yep.
So these levels look pretty good. I might keep these.
Right. And that's exactly what I was just talking about, right? You go in and you look for different highs, different lows that are going to be that after you plot them, they're respecting the levels well. You can see we reject the 786 here, find support at the 50 here. This is actually beautiful. We got a ton of wicks right off of our fib levels. And so this one does look a little bit more accurate. I agree.
Let me go ahead and edit mine.
Yeah, this is really nice.
And this is also why we like having the overlapping levels, because, you know, now should Apple set lower lows under 152, if you were just using your current retracement, you're now outside of your zone. You wouldn't have any levels. If you go ahead and overlap these with previous Fibonacci retracements, you'll still have levels to the downside, right? So, you know, a break of 152, we're playing for that 148 level.
Right.
That breaks, we're playing for the previous low of 138 back in September.
Right.
Or that might have been late October.
Yep. Perfect.
So I think these are really good. I have my levels exactly the same as Diamond, plus the super macro one of COVID low to all-time high. Those ones aren't going to give you many levels, though, obviously. I have exactly the same as Diamond has up right now, and I think these are going to be really good levels going into the next week, it looks like.
Completely agree. So I think moral of the story here, you're looking for retracements of a trend. You have to have a trend first to be able to draw your Fibonacci retracements. So look for that nearest trend. Look for draw your Fibonacci retracements and see how the price is playing out in between those since the most recent low or high has been set, right? Number two, you're likely not going to be perfect on the first try. You can go ahead and go in there and play with them, right? Like Mander just said, you guys saw that I had mine initially drawn here. I move my fib down and they're respecting the levels a little bit more. I'll probably leave this one in going forward because the levels are more accurate, right? And so that's all we're looking for is what's going to be accurate to the price levels. And then number three, you can do this on any time frame. We've got I drew my first ones on the daily, second ones on the hourly. It really doesn't matter. I would just say, obviously, the further back you go, the more space between your levels you're going to have. And so don't, draw your fibs from the COVID lows to the high that we just set this year. That's a almost 2-year gap difference. And then try and play those levels in the 5-minute, right? It's not going to work because you're taking almost 2 years of data, price data, and trying to play it on the 5-minute. Once it gets to this level, I'm buying puts or whatever. You have to play that more on like a daily, weekly time frame. Whereas the fibs that I just drew from, what is this, February 16th to February 24th, that's 8 days, right? And so these are going to be tighter price levels. I can play them a little bit more specifically than I would, levels that span 2 years. So keep that in mind as well.